We're talking the Dow is the only one of the four that's negative here. Let's bring in Scott Bauer, the CEO of Prosper Trading Academy, is joining us this morning to take a look at some data that just came out, get ahead of some that's to come, headed our way, and, well, take a look at some of the financial markets. Scott, welcome. Thanks for giving us part of your Tuesday morning.
Thank you, Ben.
Thanks to you. Unit labor costs and non-farm productivity. I'm looking at numbers at the bottom of the hour that just got released, both coming in below estimates. I think what really stands out for me is the unit labor costs last month, Scott, negative 2.8. That got revised down from a positive 1.7. I mean, this feeds right into that inflation discussion.
There's no doubt about it. And you know, the Fed is just going to have so much data coming at them over the next few days here and next week or so headed into Jackson Hole. What came out today, okay, it's out there. It does feed into the inflation talk. The focus really, though, Ben, is going to be tomorrow's CPI and Thursday PPI. And how much is that really going to affect the Fed's decision? I don't think a lot. I think it's going to be more headline news. I think it's going to be more the media talking about it. I think the Fed already knows what they want to do.
Scott, I think you're right in terms of this not necessarily being the major market mover or the major focal point here today with what we have headed our way. I've got the bonds, I've got the 10-year here, both on the 5-minute time frame. You can see the move lower and the limited reaction too as far as this number. It's just not the market mover right now. And again, CPI, PPI, some of the other focal points here certainly front and center relative to. Scott, speaking of one of those focal points front and center, the dollar firming up back to 93, still short of some resistance up around 93.50, but starting to attract some attention nonetheless.
It absolutely is. And that 93.50 number is something we've talked about for a very long time. And, you know, it looks like it might be headed there, Ben. I mean, last week's catalyst with the jobs numbers certainly helped spike the dollar here and hurt some commodity prices across the board. I wouldn't be surprised if the dollar stalls a little bit here. But the next 2 days, we could see if we get some really hot numbers here, we could see actually break through that resistance.
Yeah, I want to just show that resistance in terms of, because I think it's significant. This is a good look at the daily time frame, and while the move that we've seen off the 104 handle, that was the area that we saw the pandemic spike high, the trend environment that's been playing out to the downside. Scott mentioned here there's some key resistance right around this area, 93.50, and if we get up above it, we're talking into that 94 handle. Scott, levels we haven't seen since going all the way back to fall of last year. Some of this seems to be tied to, now we're seeing weakness in some of the other foreign currencies, which I want to get into there, because the yen had been strong, the Swiss have been strong amidst some of the China concerns, the crackdown concerns we were just talking about with AJ, but with that kind of tapering off or diminishing, at least on the short term or momentarily, we've seen those safe haven type currencies, the Swiss and the yen, again come off a little bit. The dollar firming up some, but also rates have been inching higher on the stronger than expected jobs report. And, well, just some of this talk from, we were mentioning earlier, Bostic it is recently, Rosengren, we're talking about, some of the other closely watched names. And I'm trying to think, Bostic actually, I'm trying to remember, spoke for, who was it? Oh, Barkin as well, basically saying both of us expect to see rates higher sooner rather than later. I'm sorry, tapering sooner rather than later.
Tapering. Right. And I think they're on the right track and they're getting everybody prepared. So, you know, whether it's Jackson Hole or whether it's the meeting afterwards, I think that the market should be prepared at least for that talk. I'm hopeful that the market is not going to have a big shock when that news comes out, which I think we're going to see in the next 3 weeks or so. So I don't know how much risk off there's really going to be ahead of that, to be quite honest, because you know, it certainly looks like it is imminent.
Yeah, so that being the case, I mean, you can see why the yen's come off a little bit. The Swiss franc has come off. Here we're actually looking at rates. I'll pull the charts in terms of those two individual currencies. But, Scott, you're always good in terms of sometimes we lose sight of and we get tunnel vision on the U.S. dollar. What are some of the other foreign currencies you're watching?
So look at the Aussie dollar, Ben. Okay. We've seen that come off recently also. And that's probably, you know, besides the strength of our dollar, it's probably as much the fact that they've started having some more lockdowns, commodity prices are getting hit. So that could be what we're seeing there. Same with New Zealand as well.
I want to pull those two up here because, again, I think that's important also in terms of how that speaks to oftentimes we look at that as far as the Asia-Pacific region in general. I've got the Aussie dollar on the left. I've got the New Zealand dollar on the right. And as Scott mentioned, both have come off a little bit. I just want to zoom in on the Aussie dollar because, again, a bit of a range here right now that's been forming, but you can see these areas of consolidation, this kind of stair-step pattern to the downside. Take out that 7,300 level. We're talking back to, well, levels we haven't seen again, as I was just talking about in terms of the U.S. dollar. We'd be talking about levels we haven't seen since the fall of 2020. Funny how these currencies track each other so very closely, that inverse correlation. Speaking of, let's just real quickly look at the yen. This is what I've been talking about, losing some of that momentum to the upside. And then also, Scott, talking about these Swiss francs, some disappointing numbers out of Europe overnight in terms of that ZEW indicator. What are you looking at as far as Europe in general? Because it seems like the British pound or the UK is doing better in terms of managing some of the Delta variant, the impact that it had on them.
It is, and I think that when you compare the pound versus all these other currencies we're talking about, you'll see that it has absolutely stabilized and is not really falling off as much as many of these other currencies. And that probably continues, and that, like you said, is really due to managing the Delta variant. We saw, big spikes, and now all of a sudden, a big fall off, which is a great thing. And I think that a lot of people are hopeful that's what we're going to see here as well. But going back to the yen, going back to the Swiss franc, Ben, those are safe havens, and we've seen those come off as the dollar has strengthened. Okay,
let's move and end on a bit of a positive note here in terms of price activity. The yen, the Swiss franc coming off. The currencies should be watched, but certainly attracting attention this week to begin the week is Bitcoin as well. The recent rally we've seen, strength in crypto.
Yeah, strength in crypto. And there's Oliver and I have this conversation all the time. What is the relationship really between the dollar and Bitcoin? And you can try and dissect it. You can try and turn it every which way, but there really is not that that close of a relationship, if you will. And I think this rally that we've seen here recently, both in the dollar and Bitcoin, is puzzling to a lot of people. It's not really puzzling to me. Why are we rallying in Bitcoin? Yeah, maybe it's all because of the news coming out of Washington, and people got ahead of it last week, and now it looks like some of these reforms are going to pass here. But there is some major strength. I would look for a little bit of a pullback, but if the 44-ish area can hold, Ben, and it can hold, on pretty decent volume, 50,000 could be in the cards sooner rather than later.
All right, this move up is attracting some attention here. If we could just zoom in on Bitcoin, the rally here, if higher today, it looks like 5 in a row, Scott, down only 3 since coming off those lows we saw down around 29,000. We're talking back in the end of July, around the 21st. So this is a significant move, a nice run up here. They've added, some $15,000 to BTC. Scott, appreciate you joining us here and helping us break down, the data point here released at the bottom of the hour. Actually, before we let you go, CPI, PPI, your thoughts, because one thing we've seen, and we were just talking about it a minute ago in terms of the PPI out of Asia didn't really get passed on to the consumer side, but on the other hand, we've seen commodity prices coming off, Scott, but yet the consumer side here has seen an increase in terms of some of those inflationary pressures. Your thoughts in terms of what we should watch tomorrow and Thursday?
Yeah, the consumer really has been hit with the double whammy here. We're seeing higher prices, even though we're seeing overall these commodity prices come down. Gasoline is certainly one thing, is at the top of that list. We've seen oil prices really, off 10, 15%, and prices at the pump keep going up. I think we're going to get a hot number, and that could be even more fuel for the Fed going into Jackson Hole.
All right, Jackson Hole certainly seems to be the focal point from here on out, and everybody expects or anticipates to hear something from the Fed in terms of some sort of plans to taper here. Certainly, some of these individual Fed speakers have given the indication that we will get that. Scott Bauer, appreciate you joining us, giving us part of your Tuesday morning. Scott's the CEO of Prosper Trading Academy, and